qualified to go shopping, right? We have bigger cars, so we have more room to fill up our trunks with stuff that we buy. I mean, I was laughing hysterically about this, but it was like we had a comparative advantage in shopping. That's why we do the shopping for the world, as if like, this is some difficult task. How did we draw that straw that we get to shop, right? That's the easy part. The hard part is making all this stuff, is working in the factories. That's the hard part. Anybody could go to a store and bring stuff home. In fact, people are going to stores now, they're not even paying, right? Shoplifting is running rampant, right? I mean, should we applaud these people? I mean, right? Isn't this growing the economy? I mean, they're really out there, right? They're shopping. They're not spending, but they're still getting stuff, right? And that stuff has to be replaced. But people think that, okay, well, if the economy is growing, that's going to cause the inflation. No. But to fight inflation, the only way you're going to fight inflation is to reduce the spending, reduce the demand. You're not trying to weaken the economy. You're trying to stop the spending. So what the Fed doesn't want to do, they don't want to put people out of work. That's nonsense. That's the last thing. If you're trying to fight inflation, the last thing you want to do is to have people stop working. Why? Because people working is adding productivity. Remember, it's about too much money chasing too few goods. So the more people that are working, the more goods that they are producing. So we want people to work. We just don't want them to spend. We want them to take what they earn and save it, right? That's how you bring down inflation. You get more production and you get less consumption. So now you get more goods and less money, right? And you want to have fiscal responsibility. You want the government to cut back on its spending so that demand goes down. You don't want the government to give people money to go out and buy stuff. And one of the things you're supposed to be accomplishing with your rate hikes is that consumers don't borrow anymore because it's too expensive. So you want to see credit card debt coming down, right? You want to see people paying off their HELOCs because they're too expensive, right? So it's all about more savings and less spending, and that's how we bring down inflation. Well, the Fed is not accomplishing that at all because the rate hikes have been too little to accomplish that, and they've had no help from the government because the government is spending and borrowing, like there's no tomorrow, and it doesn't care that the cost to borrow has gone up because it's just borrowing that because the government doesn't care about the deficit. So if interest on the national debt goes up, the politicians in Washington couldn't care less because whatever extra money they need to pay the higher interest, well, they just borrow that too with the rest of it. So nobody in Washington has been discouraged from spending because interest rates are higher and the deficits are bigger. They just borrow it anyway. So nothing the Fed has done has been enough. The Fed needs much bigger rate hikes than it's already had in order to affect the changes that need to take place at the federal level, at the household level, to bring down spending and bring up savings, which is the only thing that is going to reduce the future inflation. But getting back to this false idea that it is economic growth that is going to drive inflation, and that the Fed is losing on its attempts to weaken the economy and increase unemployment. This was a bad number. The fact that the Atlanta Fed is jacking up its expectation for GDP. So I would expect some additional carnage in the stock market, follow through, as a result of what happened today. Also, we got some more bad news, right? Which, good news is bad news that came out today in industrial production, because industrial production jumped up 1%. And I think this number was part of that Atlanta Fed. I think they take into account the numbers that came out earlier in the day. But it was supposed to rise by 0.3. Now, the prior month, was revised down. It was initially minus 0.5, and they revised it to minus 0.8. So it wasn't as big an upward number when you factor in revision, but it was still more than expected. And it's showing a rebound. But again, I don't think this really evidences anything strong with the economy because, again, It's not adjusted for inflation. Prices are going up. So you would expect these numbers to go up because the prices of the stuff they're producing is going up. And so it's not, they're not measuring quantity. It's the aggregate dollar value of what's being produced. So if prices are going up, then obviously these numbers are going to go up, and that's skewing it. Capacity utilization, though, also inched up from 79.1 to 79.3. And we also got yesterday some stronger than expected numbers on retail sales. Again, the consumer. That factored in to these upward revisions. They were looking for an increase of 0.4. This is July, and the number came out at up 0.7. And there was even a slight upward revision to the prior month from up 0.2 to up 0.3. Even ex-gasoline and automobiles, or first just ex-autos, it was up 1%. You know, it was 0.7. I might have got that backwards. 0.7 was the retail sales up. 1% was ex-autos. And that was versus expectations of up 0.4. And same thing with ex-oils, ex-gas, up 1% versus up 0.4. And the 0.3 from the prior month was revised up 0.4. So that was also stronger data. Wall Street, remember, Wall Street wants weaker data. That's the Goldilocks scenario that they're counting on. Because, again, the one thing Wall Street has got right is that they know that rates have to come down because nobody can pay these rates for any extended period of time. 5.25%, 5.5% is tolerable if it's only for a year or so. But if you're going to have to do that for the duration, well, then it can't be afforded, especially at the government level. If you start imagining the interest burden of the entire national debt rolling over and having to be refinanced at a 5 handle, let alone a 6 handle or a 7 handle or something like that. But it wasn't all, positive data on the week. Yesterday's Empire State Manufacturing number was horrible. They were looking for minus 0.4. This is for August. And it came out at minus 19. So a huge beat. And if you look beneath the surface of that report, it really was stagflation because not only was manufacturing down, production, but everything, the costs were going way up again. So prices up, production down. Again, fewer goods, but they're more expensive. So this was an inflationary, stagflationary number. But again, it's kind of get lost now in the sauce with all this other stuff that is going on that seems to be more important than that weak number. But it's more the Fed's outlook because, again, everybody just cares what these guys think. And if they're scared of inflation, which they should be a lot more afraid of it than what they're publicly admitting. But this, again, is a game changer for the markets. And the markets were already skating on thin ice. The markets were already ignoring all sorts of bad news and shrugging it off because I guess they were looking for these rate cuts to bail them out. Well, maybe the bailout isn't going to come as soon as they think, and the stock market potentially still has a long way to drop to catch up to the bond market. Anyway, we got another commercial break. We'll be right back, so don't go anywhere. If you're like most people, your day-to-days look a lot different during the summer, but your wellness can stay on track with help from CBD. Next Evo Naturals developed SmartSorb technology, clinically proven to help your body absorb CBD 4 times better than regular CBD oil, because oil just doesn't mix with your water-based body. It works faster too. When you need to de-stress and sleep better this summer, reach for Next Evo products. I did a lot of traveling this summer with jet lag often making it hard for me to fall asleep. Fortunately, I had Next Evo to help make those transitions a lot smoother. Isn't it time you upgraded to the experts in CBD? A recent lab study found that most of the top CBD brands contain as little as 60% of what the labels claim. So you're not getting what you pay for. Next Evo tests their products multiple times to ensure you get 100% of what's on the label. They do their research as demonstrated by 4 clinical trials. No other CBD